Welcome to The Explainer. Today, we are going to tackle the stock market. We're going to take all that confusion and turn it into real, actual confidence. And believe it or not, we're going to do it in just a few minutes. So let's just dive right in with an incredible and totally true story that shows you the real power of investing. I know that number sounds impossible, right? But just stick with me here. Okay, picture this. An average guy, we'll call him Aaron. For his entire 40-year career, he just consistently invested $400 a month. You add all that up, and this is the total amount of money that actually came out of his own pocket. But by the time he retired, this is what his account was worth: $3 million. So you gotta ask, where in the world did the other $2.8 million come from? Well, the answer is the stock market. That's it. Aaron didn't have some secret trick. He wasn't trying to time the market. He just let his money work for him, consistently, by investing in the broad U.S. market and just letting it grow. So how does this whole growth engine actually work? You know what? To really gut it, we only need to break down 3 super simple ideas. Forget all the complicated jargon you hear on the news. This is all you really need to get started. First up, what even is a stock? Honestly, the easiest way to think about it is like a deed to a house. It's just a piece of paper, well, digital paper these days, that proves you own a tiny, tiny slice of a huge company like Apple or Amazon. And the market part of stock market, that's literally just the place where all this happens. Think of it like a giant farmer's market, but instead of buying apples and carrots, people are buying and selling those tiny slices of companies. And finally, an index. You've probably heard of the S&P 500. Well, that's an index. It's just a way to track how the market is doing overall. I mean, instead of trying to watch thousands of stocks at once, you just look at a basket of the 500 biggest companies to get a quick snapshot of the market's health. Simple, right? But that brings up a really good question. Why is a tiny slice of a company worth anything? What actually gives it value in the first place? Let me show you exactly how this works with a super simple analogy. Let's talk about a lemonade stand. Okay, say your little stand makes $1,000 in profit every year. A fair price to sell the whole business might be 10 times that, so $10,000. But what if you get really good at it and your profits start growing every single year? Well, the value of your business would grow right along with it, wouldn't it? Of course it would. And listen, this isn't just some cute story about lemonade. This is the fundamental reason the stock market has gone up consistently for the last 200 years. As companies make more money, the value of owning a piece of them goes up too. At its core, it really is that simple. But wait a second. If it's all about this slow, steady climb of profits, then why do we see stock prices on the news jumping up and down like a roller coaster every single day? What's causing all that chaos? The answer, in a word, is emotion, human emotion. In the short term, prices aren't driven by profits. They're driven by the collective mood of millions of investors. When there's bad news, fear takes over, people get nervous, and prices fall. When there's good news, greed kicks in, people get excited, and prices rise. It's a constant tug-of-war between fear and greed. And what's really fascinating is just how predictable this emotional roller coaster is. I mean, look at these numbers. A 10% drop happens almost every single year. A big, scary 20% drop, that comes around about every 4 years. See, these dips aren't a sign the system is broken. They're a regular, expected feature of the system. They are the price of admission you pay for that amazing long-term growth. So, knowing all this, that the market grows over the long haul but gets bumpy in the short term, how can you actually get started on your own journey? It is so much simpler than you think. You don't have to be some kind of Wall Street genius. Seriously, all you need is a simple, consistent plan. Just be like Aaron. Have a long-term goal, like retirement, use a special retirement account, like a 401k, buy the entire market through a cheap index fund, and then, and this is the hardest part, I promise, do nothing. Just ignore the noise. And hey, if you think that sounds way too simple to actually work, get this. It is almost the exact same advice that the legendary investor Warren Buffett gave for managing his own family's money after he's gone. Buy a cheap S&P 500 index fund and just hold on. So if there's one big thing to take away from all this, it's that you have to reframe how you think about investing. It is not some exclusive club that you have to be rich to join. No, it is the very tool that ordinary people can and do use to build real life-changing wealth. And we'll leave you with this powerful thought from the father of value investing himself.
In the short run, the market is a popularity contest, a voting machine. But in the long run, it's a weighing machine. It ultimately measures the real, tangible value and profits of the businesses you own. So the real question is, are you going to get caught up in the daily voting, or are you going to focus on the long-term weight?